Our next guest who's joining us tonight is Alexis Goldstein. Alexis is a former Wall Street professional who now works as Senior Policy Analyst at Americans for Financial Reform. She's a frequent commentator on the economy. She's been on MSNBC, CNN, Real Time with Bill Maher, and PBS Frontline. And she also writes on the financial markets at her newsletter, Markets Weekly, so you can check that out to get some of her insights. Welcome, Alexis, and thanks so much for joining us tonight.
Thanks so much for having me. I'm so happy to be here.
Awesome. So we got a couple questions for you, Alexis. Just to kick it off, having spent some time working on Wall Street before spending the rest of your career advocating for economic fairness, we have to ask, what are some of the things that you saw down there on Wall Street?
Well, the thing I like to always tell people is the way that Wall Street talks about the economy and their role in it when they come before Congress, like they did today. There was a big bank hearing. Senator Warren gave Jamie Dimon, who's the CEO of JP Chase, a run for his money in the hearing today. The way they talk about it is totally different than the way they talk about it amongst themselves. I think the goal on Wall Street, when you're on Wall Street talking to other bankers, is to make money, as much money as possible, to ruin your competition. And there's even a phrase that gets kicked around called ripping your client's face off. And ripping your client's face off is when you give your client a terrible deal, but your client thinks that you gave them a bargain. And that's like a goal on Wall Street, is you want to deceive people, rip them off, but let them walk away feeling like they did great. And so that's how Wall Street talks about itself among itself. But then they come to DC and say, well, don't raise our taxes. We are the engine of the American economy. And we have, they have all of these talking points. And so I always like to tell people that they're actually a lot more honest among themselves than they are with politicians, which is probably not that surprising.
Yeah, definitely not. And thanks to you and other folks who are helping, reveal the truth and show folks what's driving the economic inequality and wealth inequality that we're seeing. So, time and time again, we've seen Wall Street and corporate America come out on top whenever Congress takes up these big new pieces of legislation, and that's usually to the detriment of working people. And this is definitely the case with the Trump tax plan. So to you, what does a fair, equitable, and just tax policy look like? What's the utopian scenario that you'd like to see?
I mean, I think there's a lot of damage we need to undo. Obviously, rolling back the Trump tax scam would go a long way. I think people forget that we had very, much higher corporate tax rates for decades and decades and decades in the United States. Even under Ronald Reagan, the corporate tax rate was between 35% and 45%. And that's the sort of mystical, magical time that conservatives sometimes like to hearken back to. It was actually a time of, much higher corporate tax rates than we have now. I also think it's important to sort of flatten the difference between the portion of tax revenue that comes from individuals, which is very high, and the portion of tax revenue that comes from corporations. So as the corporate tax rate has gone down, 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 the sort of portion, they're not paying their fair share, as we tend to say, right? But the graph is really skewed, right? We individuals pay much more of a percentage of the total revenue that funds the government than corporations do. So I think a fair tax system would start to flatten that so that it was a little more evenly distributed. I think, like Senator Warren said, we really need a wealth tax. I think that the extreme inequality that we have in this country, where 90% of the gains in the stock market go to the top 10%, and almost half of the country has no exposure whatsoever to gains in the stock market because they don't have a pension, they don't have a retirement account. And that's because we've made policy decisions to funnel money upward. And that's, some of the changes that they made to let billionaires and millionaires pass on their money to their children and their grandchildren without any kind of estate tax. And it's policy decisions that we need to undo. So I think a wealth tax would be important, changes to the estate tax so that billionaires and millionaires don't get to, pass on money to their grandchildren and their kids without, paying their fair share. Obviously, bringing back the corporate tax rate to levels that we had in this country for decades and decades and decades. All of those things need to sort of work together. And the last thing I'll throw in there is I think there's a lot of churn in the financial markets and the stock markets. a lot of really wild speculation. And I think a financial transaction tax could sort of both, be an important tax to make it a little bit more fair and make sure Wall Street's paying its fair share, but also reduce some of the churn that is, in my opinion, really just driven by some of the most powerful players who have really high speed, frequent, high frequency trading algorithms that ordinary investors buying whatever we might be buying, we don't have access to, right? So a financial transaction tax wouldn't impact ordinary investors very much to the extent people are lucky enough to be investors, but it could help even the playing field with some of these Wall Street players who have this real edge over everybody else.
Yeah, and it seems like over time that edge keeps getting bigger and bigger, right? And that's why they're able to accumulate more and more wealth and income. You mentioned a bit about like the duplicity of like what we hear from Wall Street. Yeah, like when they're in congressional hearings or what they try to sell to the public and how they act, amongst themselves. One other talking point that we hear often from them is, oh, if there's like a wealth tax enacted, it's going to tank the stock market. It's going to, destroy jobs. But you've written a lot about how, these talking points are driven by like fear mongering and simply aren't true. Can you explain a little bit more about that, like how they're able to use this like fear and manipulation to make these policies unpopular?
I mean, it's really a story of the person who cried wolf, right? It's if you do X, if you raise our taxes, if you do a wealth tax, we will go to another, we will move out of the city, we will move out of the country. And it's interesting, I was recently on CNBC with Kevin O'Leary, who's one of the Shark Tank guys. And he was saying, he was doing the fear mongering. He was like, if you raise the corporate tax rate, we will move, we will take our businesses elsewhere. The United States will lose businesses. Kevin O'Leary is Canadian. He used to be on the Canadian version of Shark Tank. He moved from Canada to the United States in the Obama administration when the Canadian corporate tax rate was lower than the corporate tax rate in the United States. Why did he do that? Because the US Shark Tank is more profitable for him than Canada Shark Tank, right? Companies want to be in the United States. We have a very profitable marketplace here. So much as, my banker, my fellow banker coworkers, when I used to work in banking, most of them lived in New York City, even though the taxes were higher because they wanted to live in New York City. One or two of them who had families and, wanted to live in Jersey, moved to Jersey, but most of them stayed in New York because they wanted to be in New York. And most companies are going to stay in the United States, whatever the tax policy is, because they want to have access to the American consumer. And so the best I can say is that they're crying wolf at the end of the day. And then a lot of the talking points they use about how the trickle down economics, if you cut taxes and, it'll trickle down in the economy. We have decades of evidence showing that's not true. And when the Trump tax scam passed, one of the biggest promises was people were going to bring their money from these offshore bank accounts back to the United States, and they were going to reinvest some of this money into research and development. And that did not materialize. The promises that they made about the Trump tax cuts did not come true. We have decades of evidence showing trickle-down economics doesn't work. So now we're saying, look, we know what doesn't work. Let's try what we know has worked previously, what worked in the 50s and the 40s and the 60s when it comes to tax policy. And so I just think that it's important to remember at the end of the day that a lot of these folks are blowing smoke and they're used to getting away with it, and we shouldn't let them get away with it.
Yeah, absolutely. We shouldn't let them get away with it. I think a lot more folks are catching on about this duplicity and some of the talking points they use not being entirely accurate. So I think now we're going to go for some questions from the chat. So I have one here. And this kind of relates to another talking point that they use, which is that companies will raise prices for consumers if taxes are higher. We also hear that, but like arguments around raising the minimum wage, right? That the costs will get shifted to the consumer. So what do you say to those talking points?
So what those ignore is the way that we shift those costs already, right? So Walmart, for example, might argue against a higher minimum wage, but Walmart is able to pay a lower wage because there is a sort of safety net in place, right? There's a huge amount of people who use TANF and SNAP and some of these government programs who work at Walmart because they qualify for these programs. And so we have public policy that in a way enables companies to pay lower wages. And so I don't think it's true that they would raise prices if there were higher taxes, because they charge the price that the market will allow them to charge. It's not like they charge low prices out of the goodness of their heart and they're just waiting for some tax policy to come along and change it, right? They charge the highest price that they can charge and still have people buy their goods and services, right? Because at the end of the day, most of these companies, they're profit-making enterprises. They're trying to maximize their profits. And so they're going to charge the price that they can charge, regardless of if the taxes are high or low. But again, that's another one of these talking points that they like to throw out. But I think they get away with not taking into account some of these, what we call sort of technically externalities, right? Like the cost of climate change, like companies aren't accounting for that. And we all pay for that when there's floods and wildfires, and the government pays for that. And that doesn't get factored into the cost of things, right? But that's what taxes pay for, is those sorts of bailouts when we need to put out a bunch of fires, or we need to, clean up the BP oil spill, or we need to rescue the banks. And I think it's unfair for them to say, oh, no, if you make us pay our fair share, XYZ bad thing will happen, but you should bail me out if I crash the economy. And you should make sure that we rescue the corporate bond market if there's a coronavirus pandemic. And so we're just saying, look, we're trying to make it even. We're trying to, okay, so maybe we'll rescue you when there's an emergency, but we also need to rescue the individuals on Main Street. And in order to do that, we're going to have a wealth tax, we're going to have a higher corporate tax rate. And so that's how I would respond to that.
Thank you. Actually, a related question to that last point, a lot of these Wall Street corporations and big banks, they're responsible for causing the financial crisis back in 2008 and for these impacts on the economy. So, why do corporations and big banks like that still have a say in like driving so much of our policy when we saw what the impacts were of letting them run rampant in many of our lifetimes?
I mean, I think it's a great question. I don't think they should. I mean, I think the unfortunate answer is they have a lot of lobbyists, and those lobbyists ask for a lot of meetings and they make a lot of questions, but we all can make a lot of asks. And MoveOn is a great organization that helps let all of us make asks of our politicians too. And so I think as long as we can be just as loud as the Wall Street lobbyists, we can also try to push policy in the direction that is more fair. But, I think politicians listen to them because they're constantly knocking on their door. Of course, there's money in politics as an angle too, but I think it's a great question, and we should not let these companies that we have bailed out drive our policy decisions.
Yeah, and related to another question related to that, you talked a bit about how we're like constantly hearing these talking points from them, and it becomes like crying wolf after a while, but also like a lot of those talking points sort of become like the conventional wisdom, right? So we hear it not just from the Wall Street executives themselves, but from like, commentators and people in the media who are just like, well, this is like the way things are, right? So how do you think we could achieve like a shift in that culture from, celebrating and like edifying like the wealthy and large corporations and the rich to, a culture that's more focused on fairness and elevating that?
That is a really excellent question. And I feel like the American Jobs Plan and a lot of, these ideas about spending big on infrastructure actually is a partial answer to that question. And the reason I think that is, so what is alluring right now, right? We've had a lot of talk about GameStop, and some people made a lot of money on GameStop. Some people are doing other things in the financial markets. It's really hard to jump from one class to another in America unless you basically win the lottery in the way that some people did with the GameStop thing. And why is it that so many people see that is their only chance to jump from one financial circumstance to another, is this like big payout, is because we've had over decades, as we've lowered the corporate tax rate, as there's been this war on supporting individuals and having a social safety net, we've made it really hard for people to get by. And I think if we can have policy like, the American, like the infrastructure plan that the president is proposing, we don't have to live on the edge. We don't have to be in this financial precarity. And then we can focus on the things that we're passionate about, right? Instead of people being like, well, I'm going to go to Wall Street because I don't come from intergenerational wealth and I want to provide for my family. Maybe if we could just provide for everyone, then we could pursue what we are more passionate about. Yes, some people are passionate about Wall Street and they'll still go there, right? But maybe we can have more people focused on things like curing cancer and finding the vaccine for whatever the next pandemic is, or figuring out whatever cool technological innovation you have. I think if you take away that economic pressure, whether it's you trying to help yourself or you trying to help your family, people can pursue their passions, and then hopefully we would move away from this greed-centered sort of worshiping the wealthy. Because I think in the way we have it now, with inequality so extreme, there is this sense that like there's winners and losers and there's morality attached to money. And in my opinion, if you're wealthy, you're lucky, right? Most hedge fund managers they made a big bet and it went well. And what you don't hear about is the hedge fund managers that went a big bet and they went bankrupt. So they're not geniuses, they're just lucky, but we worship them as if they are smarter than us, and they're not. And so I think if we can provide for everyone, if we can have these sorts of plans like the infrastructure plan, hopefully we can just take the pressure down a little bit. And we won't all be so focused on like jumping from one place to another and getting that big lottery payout. And then we can think more about fairness and we can move away from the greed. But I do think, we need public policy to help us get there, because I can understand, right? We've been through a pandemic. Some people are desperate. They're trying to find a way to fix their circumstances. And that's where the government can come in and really help us. And we need to sort of push them and provide the public pressure to make the path so that they can pass the bill.
Yeah, absolutely. And hopefully, thanks to the work that MoveOn members and other activists and organizations out there are doing, we can get closer to that system that's more fair, more equitable, and really provides a society where everyone can thrive and be taken care of. So I think that's it for our program tonight. So thank you so much, Alexis, for joining us and sharing your insights. If you just want to do a quick plug for where folks can follow you and learn a bit more about your work.
Sure. So I work at Americans for Financial Reform, and the best place to find me is on Twitter. I'm just at Alexis Goldstein, and I try to put all my stuff there. But it's been a real pleasure to be here with all of you. MoveOn is such a great organization. It's been a pleasure. Thank you.